standing by. This is the conference operator. Welcome to the Aris Mining Corporation third quarter 2023 results conference call. As a reminder, all participants are in listen-only mode and the conference is being recorded. After the presentation, there'll be an opportunity to ask questions. To join the question queue, you may press star then one on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star then zero. I would now like to turn the conference over to Mr. Neil Woodyer, Chief Executive Officer. Please go ahead.
Thank you, operator, and good morning to everyone. I'll start by providing a brief overview of our business this quarter. I draw your attention to the cautionary statements on slide 2, as we will be making several forward-looking statements. Starting with slide 3 of the presentation, we are pleased to see a return to stability at our core Segovia operations, following the challenges in Q1 which related to a mill fire and a national explosive shortage. Notably, in August, Segovia produced 19,400 ounces, which marks a new production record for the asset. We continue to see strong performance in September and October, and remain on track for full-year production guidance of 195,000 to 210,000 ounces. Since taking control of Segovia in September 21, our optimization efforts have focused on cost reduction, safety improvements, and effective integration of artisanal and small miner sources. And we're now starting to see these efforts pay off in our financial results. Additionally, we recently announced a 114% increase in Segovia's measured and indicated resources, with the resources now standing at 3.6 million ounces at 14.4 grams per tonne, and we expect to release our new reserve by the end of the month. With Segovia generating stable cash flows for the foreseeable future, we started to move our attention to building the Marmato Lower Mine, which represents the next large-scale gold mine in Colombia. Following the receipt of its PMA in July this year, we started construction in September of this fully funded asset. We view Marmato as a foundational asset due to its low all-in sustaining costs of just $1,000 an ounce and a 20-year mine life. Once up and running, Marmato will take our consolidated production profile to 400,000 ounces a year. At today's gold price, that represents a forecasted annual EBITDA of over $300 million a year for almost 20 years of life. At a broader country level, our commitment to partnering with local small miners positions us to unlock additional opportunities in Colombia. Notably, in the Soto Norte joint venture, Aris is assisting the formalized Calimineros group to commence production in the next quarter, and we plan to process the high-grade ore at Segovia and Rio Dona's plant. We're also advancing discussions with other parties to increase our support to small miners in the Soto Norte area. We continue to believe that the market is short of growth-focused gold producers, and we look forward to operating and developing our portfolio of high-grade, low-cost assets as we pursue our goal of creating the next significant Latin American gold producer. And with that, I'll hand over to Richard Thomas, our Chief Operating Officer, for a review of our operating results.
Thanks, Neil. Looking at slide 4, we have emerged from operational challenges following the mill repairs and explosive shortages in the first part of the year, and you are seeing the Segovia plant operate at 1,900 tonnes per day, or about 95% of nameplate capacity. Grades were in line with our mine plan and up from quarter 2 at 10.77 grams per tonne. In this quarter, Segovia produced 53,826 ounces compared to 47,882 ounces in quarter 2. We experienced a modest increase in site mine costs related to inflation of materials and the strengthening of the Colombian peso. Thus, we reported an all-in sustaining cost of $1,194 per ounce. As of quarter 2, we are breaking out OPEX to report either partner or owner-operated cost structures. We continue to believe that it's important to understand that our ASM partners are allowed some participation in the gold price, and as such, this component of our business has more of a fixed margin element. On a combined basis, we are still seeing a strong 35% margin on an all-in sustaining cost basis at Segovia. Before going on to more detail at our two producing assets, I'll hand over to Doug Bowlby, CFO, to discuss our financials.
Thanks, Richard. I would like to turn your attention to slide 5. As mentioned by Richard and Neil, we had a strong operating quarter, which resulted in a revenue increase to $113 million, up 6% compared to Q2. All-in sustaining costs were up in Q3, both as a result of the strengthening of the Colombian peso relative to the US dollar and the purchase of some artisanal material bought at higher spot gold prices. Free cash flow from operations totaled $36.3 million in Q3 and reflects an increase of $31 million from Q2. This was driven by increased gold revenue and the fact that Q2 had been impacted by the annual Colombian tax payment at the Segovia operation. Also noteworthy, we generated $11.7 million in free cash flow from operations after investing $24.6 million in expansion and growth projects, including at the Marmato Lower Mine, which is now in construction. Our cash balance at the end of Q3 was $211 million, essentially flat from $214 million at the end of Q2. So this clearly demonstrates that our current operations are funding our growth investments and our corporate financing costs. We remain in solid financial shape to bring the Marmato Lower Mine project through construction, as we also have access to $122 million of additional stream financing from Wheaton Precious Metals. We expect to receive the first tranche from them of about $40 million when we hit the 25% completion milestone on the project in early 2024. Then, moving to our financial results on slide 6. In this table, we are showing positive trends across a broad set of financial metrics. Adjusted EBITDA was $41.6 million for Q3 and now totals $120 million for the 9-month period. This speaks to the significant cash flow generation from Segovia. We were also profitable with net earnings of $12.4 million in Q3, or 9 cents per share. On an adjusted earnings basis, this increases to 11 cents per share and 30 cents per share on a 9-month basis. We're very pleased to be reporting both significant cash flow generation and positive earnings. I'll now hand the call back to Richard to discuss our operations and projects in more detail.
Starting with Segovia on slide 7, we have incurred sustaining capex of $16.5 million year-to-date at Segovia. Encouragingly, our strong production results in Q3 at Segovia appear to be carrying out into October with both tons and grade, with what looks like similar milling rates as well. Moving to slide 8, we'd like to continue to highlight our strong results of our infill and expansion drill program, where we have completed $10.5 million out of a budget of $17 million exploration spend, and that has helped us drive the big resource increase we released last week. As the program advanced and we've become more efficient, the cost per meter has reduced, and thus we'll be able to expand our exploration program this year, allowing us to drill 105 kilometers versus the 85 kilometers budgeted. The increase in resource stems from a detailed review of the resource model at Segovia. We have improved the understanding and the interpretation of the discrete vein shapes, and as a result, we have been able to create wireframes that more closely capture the natural shape of the vein. By doing this, we eliminate waste that was previously included into the vein wireframes, and thus reducing the grade below our cutoff. The next step will be converting the measured and indicated resource into a reserve estimate to be filed in November. Moving on to Marmato in slide 9, our focus is clearly shifting to the Lower Mine expansion project. We have started the construction of access roads in September, which is a critical step in establishing infrastructure to support the construction of the new process plant and mine infrastructure. We have begun to receive tenders for long lead key items and are progressing through the adjudication stage before orders are placed in the last quarter of this year. Aris is working closely with Arzenco, the EPCM contractor, for the processing plant. The design and engineering work of the process plant is well advanced across all disciplines, and the bulk of non-critical component bids have been issued into the market. We are still targeting our first gold pour from this bulk tonnage operation in late Q4 2025, with commercial production sometime in 2026. At the Upper Mine, we launched our first small miner participation program in April this year. Since commencing operations on 16 level, artisanal and small-scale miners delivered 1,423 tonnes of material at an average grade of 6.21, which is double what we do in our own operations at the end of September 2023. Marmato contributed 6,367 ounces for the quarter, and our focus on Upper Mine will be expanding to the high-grade partner source feed to lower the cost profile at the small producer whilst we build out the mechanized lower mine as owners. We look forward to providing the market with further updates as construction accelerates to the end of the year, and with that, I will hand back to the operator for questions.
Thank you. We'll now begin the question and answer session. To join the question queue, you may press star then 1 on your telephone keypad. You'll hear a tone acknowledging your request. If you're using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star then 2. Our first question is from Kerry Smith. Please go ahead.
Thanks, operator. Neil or Richard, just at Segovia in August with this record production, was that driven by grade or was it higher throughput? Like, what was the components to get to that record?
That's for you, Richard.
Right, so in August to get to the high production, so it was really grade driven as well as tons driven. So our mill is starting to stabilize at around about the 2,000 tons per day instantaneous mill rate. And we've been taking real care to reduce our stoping width, reducing dilution, and that's how grade has gone up. So that was as a result of us of those two elements, which gave us our production in August.
Okay, so the improvement in grade was really less dilution, not that you were in a higher grade stoping block, is what you're saying then?
Correct.
Okay, got you. And on the, maybe just for Doug, on the financing with the stream from Wheaton for Marmato, you were saying you're expecting $40 million in Q1 when you hit 25% completion. Can you just remind me what the remaining milestones are to draw the rest of the roughly $80 million, I guess?
Yeah, sure, happy to. So there's 3 milestones: 25%, 50%, and 75%. And the payments are $40 million, $40 million, $42.
Okay, got you. And would you hit the 50% milestone in late 2024, or would that be a 2025 event?
I think that should also be a 2024.
Okay.
Towards the end.
So Q1 for the first one, Q4 for the next one, and then the last $42 million sometime in 2025.
That sounds right.
Right. Okay. And is there any plan to update or revisit the CapEx estimate, the $280 million for the lower mine at Marmato between, while you're doing the engineering, or are you still pretty confident that $280 million is a reasonable number?
We're still pretty confident that's a reasonable number. It's a relatively recent one because as we were waiting for the PMA to come through, we were able to make considerable progress on getting some firm numbers from the market. So at this stage, we're comfortable with the number.
Okay, that's great. Thank you very much. Appreciate it.
Thanks, Kerry.
The next question is from Carey MacRury with Canaccord Genuity. Please go ahead.
Good afternoon, guys. Maybe just a follow-up on Marmato. In terms of the capital profile, how much should we expect for the balance of this year versus maybe 2024?
Doug or Rich, you got the answer?
I don't have a strong answer to that, but perhaps you do, Richard. We've looked at the totals, but I don't think we've spent much time looking at the specific number yet, unless you've got something, Richard.
No, I do not have something, but we will definitely get that number and get back to you on that question.
Okay, great. And then maybe now that the permit is in place, construction's undergoing, just wondering if you can just review kind of how the relationship is with local communities and sort of what the plans are for kind of mobilizing the artisanal miners.
Well, I think Rich has made it clear that the upper mine is much more suitable for the small miners to mine than ourselves, and we concentrate on the lower mine. We've started that program. It started a little bit slower than we anticipated, but we're working with them, and that should be accelerating. We'll be looking to give some of the other levels out to other small miners progressively throughout the rest of the next year. And the sooner we get to a situation where we're using their expertise and skills more fine-tuned than ours in the upper mine, I think that will benefit not only Aris, but it'll also benefit the community. So that's our focus, most definitely, to do that as quickly but efficiently and safely as possible.
And everything is going well with the local communities around Marmato?
Has been going well. The social people have been very much in contact, anticipating the different moves that we're making as we start constructing. But a great deal of support and good local elections too came through from our point of view when they had the regional elections last week. So strong relationship.
Okay, that's good to hear. Maybe just one last one for me. Obviously a big increase in resources at Segovia. You know, directionally, should we be expecting a similar kind of magnitude change in the reserves, or is there something, you know, more specific about reserves that we should be thinking about?
Yes, so
that's a question I'm waiting for the answer.
Okay, so with a big increase in resources, of course, you'll be going to inspect an increase in reserves. That work is ongoing at the moment, so I don't have very solid numbers, and we will have that by the end of this month. However, the indications are that the reserve will increase to approximate anywhere between 1.3 and 1.5 million ounces. But that is work it's still under progress, and when it comes out, we will publish those numbers.
Sounds good. Thank you for that.
Once again, if you have a question, please press star, then 1. We'll pause for a moment to see if any other callers wish to join the queue. Seeing none, this concludes the question and answer session and today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.